Hello friends, I welcome you to this new session on basic course of real estate project registration in RERA. We started the session on 10th of June 2024 and we will be ending after 22 sessions. Today you have a presenter who will take up the issues and then a question answer will be there at the end. This session we had to organize because we were receiving a lot of requests across India from the chartered accountant who want to enter into the new area of practice to start this basic course so that they can enter into the advanced courses. We have conducted n number of advanced RERA courses, number of books on RERA has been done, and cooperatives, redevelopment, GST, income tax, NPO, cooperatives, so many programs have been done. So this is the opportunity for you to comment, give us the suggestion so that we can do the course. Similarly, we have also agreed to take up so many courses physical at different places, residential programs. So whatever you want, if we get more than 20 to 25 participants, we will be happy to host that program. Our aim is to empower each one of you to enter into area of practice, and wherever you get difficulties, we are there to help you. Welcome you on the fourth session on the basic course on real estate project registration, law and procedure in RERA. Now today we are going to discuss, so far you have discussed all three. First session we discussed about sections applicable, section 1 to 10. Second session we discussed about the rules, applicable rules, regulations, circulars. The third session we talked about the checklist. What are the documents required? Now today most important thing happens. Now having said that these are the checklists, now how those checklists need to be developed, that is also equally important. So the today's session is project financial planning. How a project requires a planning. When we talk about the planning, there are three types of planning in any project, and then the coordination, of course. The first is the planning related to acquiring the premises, that is related to the land acquisition. The acquisition could be on development right basis, area sharing basis, it could be a consideration basis, it could be purchasing the land. So that is one part of the planning, because all this involves the various financial intricacies. Once having said that, the land acquisition is one planning which every promoter need to do. We are not going to deal with that today. Now today, once the land, assuming that you have got the title of the land, you have acquired the land, you have got the development right of the land or the ownership of the land, once having done, now you are doing a planning. Will you go for the development so far as commercial is concerned, residential, industrial, plotted development, what type of development that you are going to. So that means you are going to now do the planning of business building approval. If you are going for a plotted development plan, which will get approved. If it's a multi-story building, of course, multi-story building plan with the competent authority you will get. So when you are doing a planning, naturally there are various intricacies which are involved. The intricacies could be, what are the FSI available, what are the TDR to be taken, what is the premium payable, how much is the construction possible, what is the landscape that is possible or the height which is possible, which permissions are required. So all this planning will happen. Then the builder will decide, a promoter will decide that, okay, I have got 10,000 square meter of the land in which I have got 2 FSI. That means I can construct 20,000 square meter of the building. And in that constructed 20,000 square meter, how many buildings I will construct? What will be the phase wise? So he will get the layout approval, he will get the building approval, and then he will go for the construction. So this is the first stage, a planning, construction planning. The second, and that is the planning which is approved. So how much is the 1 bedroom, 2 bedroom, what will be the FSI, all that, or what will be the area of those flats. The second, very important, is a construction planning. When we talk about construction, you know, the basement, if you have to go, how much time it will take for a basement. Then we are going for a plinth, then we are going for a podium, then we are going for the upper floors. So each floor, how much time it takes. So there will be quarterly the planning, that this time, this quarter we will go for the basement. Then next quarter we will go for the construction of the basement. Third quarter we will go for the waterproofing of the basement. Fourth quarter maybe we will go for plinth. Like this, every quarter planning will happen about the construction. And when we do construction, what is the expenses required, what are the material required, all that intricacies will be looked into. Approval planning, planning approval, planning of the construction, and the last is finance plan. Finance also equally important, because once I talking about budgeting, I need to know so much construction I have to do, so much money is required to be constructed, from where the money will come, how it will be invested. So that means there is going to be the financial planning. How much you have to sell, what is the rate I will be doing, how can I progress. And then as the planning, if there is any deviation, then financial planning, then we can discuss more on that. So this way, today we are talking about little on a higher side. When we are doing a registration of a project, you may ask why I should look into all this. Why should I do this? You need to do it because when you are going for a registration of a project, you are required to give Form B, which of course Vaibhav Modi, who is a RERA editor, will discuss. But when we give Form B, we need to declare to the RERA by what time we will complete the project. So that means project completion date is also equally important. So when we are giving a project completion date, that is the time that we need to do all this planning, because anything goes wrong, getting an extension of a project, completing the formality, paying additional fees, and then cutting a sorry figure, all this becomes very difficult. And if you don't do the planning properly, there can be issues of delayed position interest, compensation. Some people may exit the scheme. You will have a lot of problems. So in order to face all these problems or challenges and to take it in advance, you need to do all these at least three planning. That is a approval planning, second is a construction planning, and financial planning. For this, you need to all three people, there are three different professions. Why three professions? Because when we talk about land acquisition, you have an advocate. He gives a title report, he verifies, he prepares the document related to development, sale, conveyance, all that. I'm not getting into that. I'm talking about three professionals who are involved from the initial planning till the occupation certificate, building and project is completed. There is the first is the architect, second is the engineer, and the third is none other than chartered accountant. So therefore, it's equally important for us to understand what are the things to be done, how it is to be done, and then what are the issues that can come, and all that can be worked out. So therefore, my submission to you is that without wasting any time, let us look at the planning aspect, which of course my very close friend who is practicing in RERA from Pune is going to take. The other things that we are today discussing is the various key forms. What are the various forms required to be done? Maybe in the third session, Swati Paradkar has given some of the insights to the some of the forms to be taken, and she has gone through. But here is CA Vaibhav Modi, who has done lot of registration. I think more than 500 project registration he has already done. How many projects you have registered, Vaibhav?
1500 plus. Okay.
1500 plus projects he has registered. So can you imagine, can you get a better faculty than Vaibhav Modi, who has hand-holding, who has taken up 1500 projects, who has registered 1500 projects out of 45,000 projects which are registered in Maharashtra. So he's basically from this one, Pune. Now, the various forms like what are the title, how the title certificate should look into, what are the intricacies to be looking into, what is Sarsai certificate. Many people, because Swati must have said that these are the things required. But what are these? How to obtain those? Then encumbrance certificate. What is encumbrance? What are the litigations? And then amenities, sale, agreement for sale, allotment letter, all these things which need to be done. All these various formats also he'll be discussing today. So we have with us Sri Vaibhav Modi. I'll give a very brief introduction. He is a practicing chartered accountant from Pimpri Chinchwad. He is a vice chairman of Pimpri Chinchwad branch of Institute of Chartered Accountants of India, Western India Regional Council. He is the co-author and the contributor in RERA Law and Practice, where he has contributed many topics in that subject. I was the editor and he was the one of the contributors. He has undergone RERA leadership program at Hyderabad 4 days, and he was so much inspired and motivated that as a committee member of Pimpri Chinchwad branch, he hosted 3 days RERA leadership program for Pimpri Chinchwad chartered accountants. Nearly 150 chartered accountants participated in that 3 days program and entirely single-handedly managed and maintained. So therefore, yes, Raj Agarwal was very happy to say that yes, he was a part of that Pimpri Chinchwad program. Raj, thank you. You can also explain to the participants how beautifully that was arranged. And the purpose was just to make sure that professionals understand the subject well Even if there are chartered accountants, they should be doing well. If it is an advocate, they should be understanding the provisions of the law. Therefore, under the guidance of all these leaders, we designed RERA registration of a project into 22 sessions. All these we could explain in 1 hour or 2 hours. But Mr. Raj Agarwal messaged me saying that, sir, you are all discussing about advanced courses. What about basic courses? So let us have a basic courses. And Raj, thank you very much for giving that insights to me. And that is how we have started this course. And I think he's the first one to register also. Thank you. Now over to you. And let me tell you that those who have missed your lecture from 1 to 3 sessions, they're all recorded. They're available on the YouTube Mahaseva News channel. Please go to the playlist and you will get playlist like basic course, RERA registration, RERA registration. You will get those series. And whenever you think you need to get to it, please go in. And if you need any help regarding anything, you are most welcome to contact me. My numbers are already displayed. That is 9820106766 or 68. You are most welcome. You can join our various WhatsApp group. And I also request you, ambassador of this course, to, request other members to join and at least watch the recorded version. Next, because of this, Gujarat RERA people also requested that I should start a RERA course for Gujarat registration, which we have started. So, Vaibhav, one more feather in our cap. And Friday, you may be aware that every Friday we will be bringing the experts. At least 3 experts will be there. 1 moderator will be there. 4 people, where we will be having a panel discussion on the controversial subject. So that now that basic course has been done, now you will be in a position to understand how the controversies has to be resolved. Now, as Raj was saying, that there are joint development, there are various area sharing, revenue sharing. These are some of the controversies. Every time we are going to come out with a new topic. Every Friday it will be there now. That there will be 1 to 1.5 hour panel discussion. Sunil Naik, who is an expert in RERA, is going to discuss about the compliances to be done. Quarterly progress report, compliances to be done, and the precautions to be taken. So please be there. And we are not going to charge any fees for that. It is a free for everybody. Vaibhav, welcome to you. Thank you.
Thank you, Ramesh sir, our guru, my guru. My journey started with actually in real estate sector. I started my journey with Prabhu sir only. I always share this journey with everyone because it was Prabhu sir, because of whom I am in real estate sector. I am giving advisory on RERA, GST and income tax on real estate sector. My mostly practices concentrate on RERA. I first we attended one session in Mahabaleshwar in 2016, fortunately. And that session, that RRC was specifically I attended only to meet Prabhu sir, only to see Prabhu sir. I heard about him lot at that time. So my partner told me, let's meet him. He's a person who is a future and RERA is the future. So he casually told me, okay, we are into traditional practice. We should expand our expertise practice. Fortunately, I gone into that RRC and only heard one session of Ramesh Prabhu sir and took lots of interest. And I then started following Prabhu sir and attending all the sessions initially. So I was not aware of RERA, what it is actually, how it is. So initially RERA was not came into place, but because of Prabhu sir, I came to learn lots of knowledge. And after few sessions, he also started connecting with me because I was visible, because he saw me in various sessions. And then we had a personal discussion also, and he had lots of queries solved and due to which I am able to start my RERA practice. This was a wonderful journey with Prabhu sir, and I thanks for giving me opportunity today also to share my practical insight on what is RERA in Maharashtra, precautions to be taken, and what are the other forms, how to be filled, what care to be taken. I'm going to share about that thing today, and we'll start the session with this thing. I'll share the PPT for me. Let me one more thing add you. I'm now giving lots of training sessions on RERA at various level. even I'm giving in ICI, ICSI. Just because of Prabhu sir's push, it was very hard for me earlier. I was not a very good speaker, but now because of lots of session I have done, and I'm now confident to do that thing. It was all because of Prabhu sir. He's looking for the leadership development program, and he's doing it seriously. He's developing the people seriously, and we are their product. So my first topic of the day is precaution to be taken in financial planning for real estate project. So why financial planning is required? Prabhu sir has already given a highlight of that. Real estate project is it's very complicated. If you see, there are lots of projects which are stalled, lots of projects which are gone into insolvency, lots of projects which are not profitable just because of poor financial planning. Yes, most of your decisions go wrong only because of financial planning. If you have not done proper funding planning, if you have not done proper financial planning, you will be stuck. And this financial planning can be done only by a chartered accountant. But what happens? We be into practice, traditional practice, never enter into pre-financial planning, pre-project financial planning. We don't advise our client to do pre-project financial planning because we don't see the value into the pre-project financial value. When we don't see ourselves in the value in the pre-project financial planning, definitely we will not pitch for that service to the client. We see that not only financial planning, only taxes is also complicated. So when your project scenario changes, your tax structure changes. When your sharing, when your land area sharing is changing, your tax structure is affected. So you have to be very careful in financial planning. You have to give value to tax structure also. You have to give value to financial project aspect also, technical aspect also. And then you have to do planning of the project. In financial planning, the aspect starts from buying the land. Financial planning starts from buying the land. Before buying the land or before entering into any agreement, you should have a proper plan of that. What FSIs I am going to give, what sell price is going to be the product going to be sold, and what cost will be required, what will be the funding options for that, and how effectively we can reduce the cost and how effectively we can increase our profit. Then we'll see into this what precautions to be taken. Financial planning will be covered, but I will only covering the precautions to be taken in financial planning. First and foremost important precaution to be required is adhere to the deadlines. So in RERA nowadays, after the RERA, we have to compulsory adhere to the deadlines, follow the deadlines. If you miss the deadline, you will see lots of replication on that. So your single wrong decisions will make you bankrupt immediately. So it is that high level of problems are presently developer are facing. To do this properly, you have to go through some of the steps. So you have to do market analysis. So what is market analysis? Market analysis is to identify trends and opportunities. So what is the trend? What was in financial planning or in precaution, you have to see if there is no demand in the real estate sector, you are predicting certain price for that unit, will definitely not get that price for that unit. Let me share you one practical example with you. I have lots of example, but let me tell you one small practical example into market analysis in this factor. I have seen one developer who had planned 500 units in 6 buildings. He was coming with that plan. He himself decided to have flat cost of more than 40 lakhs rupees. 1 BHK flat cost of more than 40 lakhs. Because he thought, or he has unplannedly, he has not discussed with anything. His ambitious driven decision made him to give that price. 7 years back, he thought to sell flat at a price of 35-40 lakhs rupees, 1 BHK in the area where most of the people are labor. They work in the factories, they work in the manufacturing units, and those people coming from outside are looking for houses. The area is related to that those industries they built. In that, you have planned. The developer has planned to give luxurious apartment or to give luxurious project. What happened in that case? The buyers were not coming to take that flat because buyers were looking for affordable housing, and you were giving luxurious housing. In that areas, nearby areas, there were no project which were this big and were offering luxurious project. No one were taking those risks. This person took those risks and launched a luxurious project at luxurious price, whereas flats were selling at 20 lakhs below price. In that area, 1 BHK, this promoter want to sell it for 40 lakhs rupees. Now the things gone wrong. Demand was not there. He brought loan to complete the project. He took loan from SBI of 30 crores and started the project. Now present condition is the project is stalled. He is not able to pay the interest also. He is not able to deliver the units also. So this is kind of things happens. So here, as a chartered accountant, you should advise, you should do market analysis, and you can advise your client what price will be there, what is correct price to sell the units. This kind of precautions to be taken by you. Second precaution is loans. So what is a precaution in loan? That where many of the customers want to take home loans. They are coming from the home loans. You have to plan this thing. Whether my customer who is going to pay me upfront amount, whole amount, or they are going for through a loan method, or I will need a project loan for the project. If I am not taking proper care or I am not taking this factor into the considerations, I will definitely face strong problems. So in compulsory before sanctioning home loans, so RERA number is compulsory for that. So if you are planning for some project and you are saying, okay, I will complete the whole project and then sell it, then there is a different kind of planning. And if you are telling that I will partially complete the project or I will start selling the units from initial level, then you have to understand your customer base. You have to understand the customer. If they are coming from home loan background, then there may be a chances that their home loan may not get sanctioned. Some of customer may get defaulted, or some of customers may not pay you on time. In those kind of precautions to be taken, that will bring a proper discipline to your cash flow and help you to overcome those kind of factors. Third important precaution is the risk management. So you have to implement a robust risk management. So there are different kind of risk. So we will talk about only financial risk associated with the real estate project. What kind of financial risk are there? Financial risk in the sense you have brought the loan and you have not done proper planning and you are not delivering the project in time. You have delayed the project, your cost is going to increase. You have brought the loan, your cost is going to increase. You have cost is increased because of other factors that are increasing the prices. Those kind of risks are there. Those kind of risks should be taken care before launching the project. Before, if you're not taking factors of this kind of risk during the financial planning, then you will not be able to cope up out of the risk and you will fall prey for this kind of risk. So you need to have a proper risk management. You should advise your client to have a risk management. Now, financial forecasting. What is this financial forecasting? You should have before going for registration or before launching the project or before buying the land also. I'll say you should plan proper financial forecasting of the project. You should plan your project revenues. You should plan your project expenses. You should plan your cash flow. So what is project revenues? What is expenses? What is cash flow? And how I'm going to launch this project. So this, while considering this financial forecasting, you have to consider lots of factors like land is coming on outright. So sometimes the buyer, promoters take the land. Promoters before buying the land, he is doing a financial forecasting. Now, while doing the financial forecasting, there are three options of land. First is he is going for outright. If he is going for the outright land, then in that case, you have to see that he will have necessary cash flows after the buying the land for sanctioning purpose, for construction purpose. You have to see when I'm going to sell the units and I will get the money. If he is making inappropriate assumptions, okay, I will buy the land, get the sanction, get the RERA number, and start selling immediately. And customer is not willing to buy those property where you have not constructed even plinth also. Your plinth work is also not done. There the customer demand is that you should construct 80%, 70%, then the customer is going to come. These all factors you have to take. If you are not taking these kind of factors and you are planning it for the project, then you are going to fail into the project. So this precaution has to be taken while taking a financial forecasting. The project land, if you are going for JV, if you are going for revenue share, you have to plan this project. Sometimes we have also seen many project fails because of inappropriate JV agreement. He just want to enter into the project. He just want to become a promoter. He do a JV agreement with the landowner with committing higher area share or committing higher revenue share. In those kind of scenarios, because of these kind of factors, he is not able to deliver the project. He is not getting enough money out of the project. He is going into the losses in the project, and he is falling into this. So this precaution needs to be taken. What is correct percentage to be given for area sharing or revenue sharing, or what is the correct price to buy this land? So your financial planning start from land buying itself. Then coming to expenses, there are various expenses. You have to plan for current expenses. You have to forecast contingent expenses, what will come. You have to plan for tax planning. If you don't do all this thing, if you don't do financial planning properly, definitely you will be seeing, your project will not see the daylight. Coming to capital structure. Now, we have seen investment structure, we have seen expenses structure, we have seen revenue structure. What should be the capital structure? What should be my debt? What should be my equity in order to have maximum returns? So you can have a proper capital structure. If you don't have a proper capital structure, you are overburdened with the debt. You are going to pay interest only, and you will not get any money out of your project. If you are not balancing it with the debt and equity, you are paying more taxes on that. So capital structure is most important. How you are going to bring the capital into the business for developing the project, and what is that structure of capital. If you are over committing on the equity and you are giving returns on equity of 25% and 30%, whereas the amount is available in the debt for 10% and 12%, and you are not optimizing it, then you are definitely going to fail in capital structure aspect also. This is factor is to be considered while planning for project. So this precaution has to be taken. Now, coming to separate designated bank account. After your project is launched, definitely you are going to have a separate designated bank account. We all know, even the promoter to be explained that how it will be work. That separate designated bank account will have no lien account. Amount will be withdrawn, allowed to be withdrawn based on completion status only. So any customer money is coming from the customer will have to be deposited into 100% collection account and will go into the separate designated bank account, which is explained here, 70-30%, and your money is getting blocked in 70%, and your project you cannot withdraw it. You cannot withdraw it under the RERA. You have to withdraw it on the completion method only, percentage completion method. These factors to be taken while doing a financial planning. Why this is important? Because if you are borrowing the money from the bank, while repayment of the money and your money borrowed from the bank, you have used it for the advertisement purpose only, marketing purpose only, and less for the construction purpose. While repayment of the money, your cash flow is going to block, because enough cash flow will not be coming into the system. Enough project stage is not completed. your withdrawal is blocked and you cannot serve the bank even though money is lying into the bank. So this is very important. This is one of the key factors running into the as per the RERA Act. Now, what are the other important factors? I will complete my financial planning precautions wala part. Separate bank account I have already covered. Suppose if profit margin more than 30%, especially in case some money will get locked, means what? Your margin is higher. Your project margin is very high and you have not planned for. Suppose your project cost is 100 crore and your project margin is 200 crore. Now, unless until your project is not going to complete in time, time means it will take its stages. You cannot say that I have a money in my pocket and I will build a project in 2 days. It is not possible. It will take its time. It will take 1 year time, 2 year time, 3 year time. It's all criteria is there. Now you have to plan your money properly that it should not get blocked. Now your margin of profit is higher and then your money is getting blocked in designated bank account, then you have to think of that. Okay, whether how I have to plan, I have to plan it so that my money will not be get locked up into this. Your money is not getting locked up. Your money of customer money is getting locked up. So plan accordingly and then do all this financial planning. Now giving security and cash flow for one project, for another project, there is a restriction also. So you cannot divert one money from one project to another project. You cannot withdraw that money for other project unless until withdrawal method is followed, unless until rule is followed. So I have seen many promoters are having huge cash flow blocked in the bank account. Project is almost in completion stage, but it is blocked. So this they cannot withdraw it. As per the rule, they cannot withdraw it. So this planning has to be done initially only, because there may be a case you are building you have project of multi-story at multiple buildings. You are having 20 buildings in single project. So how the RERA number should be taken? Whether it should be taken in a phase-wise manner, whether it should be taken in a single manner. What will be the replication on the finance side if I take a phase-wise manner? What will happen? This all factors has to be considered before doing any registration or taking any precaution has to be taken. This way I will end my first part, which was given to me, is of precautions to be taken while precaution to be taken for financial planning. Let's start with our next part of the session. I'll share another PPT with you, which is different forms. So my other part of the today's training is related to what are the form required for registration. Now, let me tell you very important. This SIRS has given this series. It's a purely practical insight. So this series will help you to understand each form in depth. They have divided the topic specifically to all the peoples. So here I am going to discuss on different forms under the RERA, like form 1, 2, 3, and other forms like title report, certificate, encumbrance certificate, and list of litigation, all these factors which is required for registration purpose. So yeah, I am going to cover, I am given very short time, I will cover very fast this aspect. First part is form 1. Form 1 is architect certificate. You will see the form 1 here. Form 1 is to be issued. It's not required at the time of registration, but for every withdrawal of the money, you will require this certificate. But whenever you are issuing form 3, you should have form 1 and 2 with you. As a chartered organ, if you are issuing form 3 for registration, you should have form 1 and 2, and they can ask you anytime. Even in the registration also, they can ask you to upload form 1 and 2. It's depend upon the case to case. Presently, for registration, you are not required to upload form 1 and 2. But you should, as a RERA advisor, you should understand what is form 1. The form 1 is a certificate of percentage of completion of construction work. It's a certificate where architect is certifying how much percentage of work is completed. So he's certifying only percentage of work is completed. This is very beauty of RERA, that they have unified it for all the project. It's a uniform. Form 1 is very uniform. If you compare project A with B with C with 3, you can compare it very easily. It is that easy. That easy form is being given. Now this has to be given every quarterly, and for registration it is not required. Form 1 says about there are two tables. First table is a table which is to be given by building wise or wing wise if it is a standalone building for whole the project, whole layout. And if it is there is a various building or various wing in the project, you have to give it wing wise. Now coming to that task and activity which is predefined in RERA. So first activity is excavation. In second table, that is a 3 number. First is serial number, second is tax certificate, and third is percentage of actual work done as on the date of certificate. So if you assume the date of certificate, you have to give percentage of work done. First task is excavation. Obviously, you start with the project will start with excavation. They have given very stepwise approach to this thing. So first is excavation. Second is basement. Now here you have to give percentage. So once excavation is done, you have to give it 100% done. If there is a basement, you have to give basement percentage. Then you have to give podium percentage. Then you have to give plinth percentage. Steel floor, if it is there, steel floor has to be mentioned. Then number of slab, how many structures are there? Number of floors or number of slab, we can say how many is there. You have to mention it 13 slab, 12 slab, 1 slab, and then percentage. What is percentage completed? Very carefully, please evaluate this thing because GST department is now, in my case also, in 2-3 cases, they have asked this kind of certificate to work out the GST applicability, calculate the GST liability. So this is very important. This is giving a highlight of the project completion. Now I am in a current stage, in a stage that once I see the form 1, I can tell immediately that how much project is completed. So even the architect is not asked the overall project how much completed, but I can understand for my purpose while issuing the form 3 that what percentage is completed. I can derive it from here. You have to have that basic level of understanding. It is only possible when you go for various form 1 comparison. Then you can come to know it what is actual completion is happening. So now after completing table A, there is table B. Table B talks about common areas which is not covered above. So building is separated, wings is separated, and your common area which is called roads, then there is a water supply, then a sewage line is there, then there is a street lighting is there, other community building is there, you have a swimming pool over there. You have to mention all those other areas. What are the common areas are there? You have to mention it specifically. You have to mention whether it is proposed or not. If it is proposed, then what is the completion of that work, and you can give additional detail also what it is actually, what kind of stage it is. After doing this, you have to see that signature of architect is there, and again the signature of counter signature of promoter has to be there. If you upload this without promoter signature, your form is going to rejected and you will face QPR non-filing notice to you. This is very important factor. Form 1 talks about certificate of percentage of completion of construction work. Now coming to form 2. Form 2 is to be given by engineer. Engineer here certified the cost incurred for development of project. He is certifying what is the estimated cost required for the development of the project. Then he is certifying what is the cost incurred for the development of the project and what is the balance amount required to complete the project. This is done by engineer based on the drawings he has available. He have the drawings with him, and he visit the site. Based on that site visit, he can tell as per me this was the estimated based on the drawing, and actually incurred is this much. I can see the site and I can tell this much is actually incurred estimated cost. How he do it? First he estimate it. So he says this much cement is required, this much quantity of cement is required. He first work out the quantities, items required for the project based on the drawing and amenities and agreement he has entered with the agreement he has proposed. Based on the agreement, in that agreement what specification he has proposed. Based on those specification, based on those project drawing, he work out the estimation in quantity, then give the values based on the required time frame he will require, and he derive estimated cost of the project. After doing this, he just have to follow every time the certificate. He has to carry this own working, and he will mention, as per me, now this much cement is used, this much steel is used, this quantity are used, and this is actually cost is incurred. After doing this, finally, we'll get A plus B, A minus B is equal to C. So this will get estimated cost which is required. Now A plus B is what? Okay, there are table also. So this above figure has to be given in a table format. In table format, what engineers give is there are two table. Likewise, we have the architect certificate. There were two table. We have engineer certificate. There are two table. First table is related to again building wise, wing wise. He has to estimate the cost. So building wise, he has to estimate the cost. He has to estimate cost incurred as on the date of the certificate. Then what is the percentage 2 divided by 1, we will derive the percentage, and what is the balance cost required? 1 minus 2, you will get the balance cost tables. There is fifth number item also, which is say any additional extra item is not included in above. So he can certify while every quarterly certificate, he can say, these are the extra cost is incurred which were not estimated earlier. Now it is required to be incurred. He can certify in 5. Table B is again for development work, internal work, means for road, sewerage and all these things. This kind of table A and B is there, and table A and B is to be compiled and mentioned here, A plus B, and based on that, it is possible that table A may be repeated. There may be a 10 table A, but table B has to be one single only. It cannot be 10. It is for the project only, registered phase, for the registered phase. Now coming to next part, he has to, whenever he is saying extra items and all this thing, he has to give table C also. Table C where he has to mention those extra items which were not there and amount for that. This is most of the form 3, form 2, I don't see it. People missed it, but it is there. It has to be there. Whenever you're mentioning any figure, you have to mention table C also. Now coming to form 3, most important form for our chartered accountant. This is form 3. This has to be prepared very carefully. This is required at the time of registration also and at the time of withdrawal. Form 1 and 2 is not required, but 3 is required. Now what is 3? Is a certificate of financial progress. After 2021 December, new format is prescribed. We are going to discuss new format only. We are not going to discuss old format. Now after 2021 December, new format was prescribed, which says of chartered accountant is a certificate of financial progress of work. This chartered accountant certificate is to be given on letter. You have to mention UDIN carefully and mention date also over there. This is for the registration. Now there are various tables into this. First table is table A, which talks about estimated cost of the project at the time of registration of project. So table A is estimated cost of project at the time of registration of project. Here you have to mention land cost. Now, while mentioning land cost, there are various problems you have to consider. First is land can be outright land. Second is land can be a inherited land free of cost. Third is land can be on revenue sharing agreement, and land can be on area sharing agreement. So various type of land agreement are there, and based on that you have to mention that cost. So in case of area sharing agreement, you don't have to mention any value because you are not paying any price. You are not going to pay any price for the land. In case of revenue sharing agreement, you are going to pay the price for the same. You have to mention as per the ASR value. In case of again purchase of the land, outright purchase of the land, you have purchased it for some value. You have to mention ASR value over here. This kind of land cost you have to ascertain and you have to mention it estimated. So if I'm having I have purchased land for 1 crore and I'm having a present ASR value of 2 crore, then you have to mention at the time of registration 2 crore rupees, and you can take withdrawal of that 2 crore rupees. Second number of item, estimated amount of premium payable to obtain development rights. So whatever you're planning, if your financial plan is proper, if your forecasting is proper, you can take figure from that. You have to estimate what is the amount I have to pay for obtaining the development rate. Sometimes I have to take additional FSA also. Sometimes I have to take fungible area also. Sometimes I have to take TDR also. TDR is coming in 3 item, third number item. I have to estimate it properly. What premium I am going to pay for that, and that comes in a land cost rate. Third number is TDR. Now, what is TDR? TDR is development right. Many time government, state government acquire the lands, and they, instead of paying monetary consideration, they give it TDR to the landowner. Those landowner, they can trade it TDR to developer, or they can sell it to other landowner. Those TDR which is given, the TDR is nothing but a right to develop additional floors or additional area into the project. Suppose I am a promoter and I have purchased 5 lakh, I have a sanction on my plot area 5 lakh square feet of construction. But because of develop TDR, I can construct area of 7 lakh square feet. This 2 lakh is increased due to of land acquisition, TDR acquisition. So you have to plan if you are going to use TDR for the project, then you have to mention that TDR value also. Coming to D part, which is talking about estimated amount payable for state government. This may be a stamp duty paid on the land acquisition, or any transfer charges, or any registration paid for acquisition of land. Now, next part is estimated land premium payable on ASR for redevelopment of land owned by public authorities. So sometimes we have to pay the premium where a land is redevelopment and it is owned by public authority. In that case, only these figures come. Now, the second part is under rehabilitation scheme. So some things work differently in rehab scheme. In rehabilitation is what it is being given by authority to rehabilitate certain building. Then in that case, you have to give estimated construction cost of rehabilitation building, including site development and infrastructure for same, as certified by the engineer. In rehabilitation, you have to give estimated construction cost, what is required for rehabilitating building for site development. Second part, which is to be certified by the engineer. There are sometimes it is possible that you have to clear the land. The land is occupied by someone, and you have to demolish that structure. Slum dwellers are there, tenants are there, other tenants are there. Then in that cost, you have to incur certain cost, clearance of land. Those costs can be given into land cost into this. Now, estimated cost of ESR link premium, again, which is being covered above, it is being covered under rehabilitation also separately if it is paid for rehabilitation purpose. Coming to development cost, construction of building, estimated cost of construction as certified by the engineer. The first part is, we have seen form 2, who is certifying engineer cost, and he is saying certain value which is required for estimate, which is required to construct the project. You have to mention those amount. That has to be mentioned here. Then again, engineer is again given second line item which discuss that any additional expenses is required or not. So those additional item which is required, which was not included in the estimated cost, then you have to add it into this one part. So these two, A and B, has to be taken from engineer certificate. Both factors to be taken from engineer certificate. Third one item is estimated expenditure for development of entire project. So which is not covered above. A and B, certain expenditure is not into that, which engineer cannot certify it, or he cannot predict it. Those kind of expenditure which is required for development of the project can be given into this. Those expenses which are like supervisor salary or consultant fees are there, or any other overheads are there. This kind of expenditure you can mention it here, and then you can go for table D, item sub D, which is D1 is saying estimated taxes, says fees, charges. Now your selling is including taxes. Your sale price is including stamp duty. You cannot bifurcate. Then whatever the expenditure you have incurred for that purpose, you can withdraw it from here. You can mention those as you can estimate it, and you can withdraw it. Now interest payable to the financial institution. Suppose I have borrowed some money for the project and then I have to pay the interest on that. That I can estimate it here and I can then withdraw it. Now table A talks about only estimation. Table B talks about actual cost incurred for the project. We have very less time, 15 minutes. So I am little bit doing it very fast. So actual incurred is, this is when earlier I have estimated it. Now I am going to incur it one by one. So where every quarter I have to certify certain expenditure incurred against those items, line items, and I have to certify it here. Those items are this kind of incur. Now after you have calculated estimated, then you have calculated actual incurred. Based on that both thing, you will be calculated what is the amount can be withdrawn from the designated bank account, and you can reduce it from that. What is actual amount withdrawn from that, and what is net amount available for the withdrawal. Now coming to the table C talks about statement of receivables from the sales. So whatever the sale you have made, sold inventory, you have to maintain two things. One is sold inventory, second is unsold inventory. You have to give all the sold inventory into sale wala part. Once you, for while registration, if you give any inventory, if you show any inventory as a sold, they will definitely issue you notice, because you cannot sell it as per section 3 without RERA registration. So be very careful while doing registration. There should not be any sold inventory. In unsold inventory, you have to mention all the flats taken into cognizance of the layout plan. If there are 100 units sanctioned, then you have to mention 100 units. Your total should not mismatch. It should match both way. So sold and unsold, you have to mention it. Coming to table D, we have a two comparison between the cost and receivables. It's a summary of all above figures. You have to mention it. Table E is only the bank account we have taken, designated bank account, which was mentioned in the RERA. You have to give opening balance, deposit, withdrawal, and closing balance. So you have to mention this table every time, and you have to say that whether he has followed that rules or not, and withdrawal is as per the rule. Last table, very important table, is table F, which is actually of means of finance, where they have given own funds, borrowed funds, unsecured, secured, and customer receipts. So this will help RERA to see what money is being getting used to construct the project. So this has to be done properly. Then finally, chartered accountant has to sign with UD number is compulsory, and promoter has to countersign it. This way we will complete form 1, 2, and 3. Coming to form A, which is a legal title report. This is a draft format, and you cannot deviate it. You cannot add anything. You cannot reduce anything from format A, which is given by the RERA. So you have to be very careful. Legal title report, there are lots of issues coming up only related to the legal title report, and lawyers don't listen to us. They go with their own methods, old methods of search report. Now, why this RERA has done this thing? To uniformity, for uniformity. Whenever I am the buyer, I should see whether the title is clear or not, whether the lawyer certified the title is clear or not. So this has been very simplified. It made it in a 2-page, right? So first page talks about, we'll talk the elements, small elements. We said title clearance certificate. You have to use the same word only. Title clearance certificate with respect to plot number. Now this plot number should match with your sanction commencement certificate. It should not be different. There may be a possibility there are larger layout, and you are developing your project in a small layout, but you have to mention here specifically that. Then you have to mention it. What is the larger layout and what is the smaller layout for which I am giving a legal title report. Now he has to mention that I have to investigate it. Now the plot area has to be given in a square meter only. You cannot use square feet or other method, or R method or H method or something else you are giving. Now I have investigated the title of the said plot on the request of. Now here the request can be done by anyone. It can be done by landowner, it can be done by owner, or it can be done by promoter. That doesn't mean that sometimes the people argue that मेरा नाम तो है उधर, so I am having a clear title. No, it is only your request he is investigating. So here he is mentioning is based on your request, he is investigating. There has nothing to do with this thing. First is description of the property. So what is description of the property? Here you have to describe the property very carefully. Okay, what for what the search report is given, what area it is, what boundaries it has, and what are the properties. Other description is there. Whatever the property description, you have to mention it. Second, you have to mention documents of allotment of plot. Now people use lots long list over here. They mention all starting to end up. No, it is not required. You only mention how you have got the right from the plot. So mention specifically those details only from which documents you are deriving the title to yourself. If you want to mention whole flow, that is given in a second part. Flow of the title, you can see in the right side, flow of the title of the said line. But in first page, it is has to be very prescribed, chota wala, small, no lengthiness. It has to be very specific. Now, third one is a 7/7/12 ka utara or property card issued by this dated and mutation entry number. You have to mention it. Okay, what 7/12 you have to and what mutation entry you have got it. Fourth part is search report. You have to mention कि कितने साल का search report किया है. It has to be for 30 years, not less than 30 years. And कहाँ से कहाँ तक का किया है. If your search is less than 6 months from the date of registration, then this report will not be valid. You have to take it again search. Now coming to second part, on perusal of the above mentioned documents and all other relevant documents, relating to the title of the said property, I am of the opinion. Now here he has to mention very carefully, and the name has to be of that promoter who is applying for registration. If you are mentioning other name, then you are not going to get registration. You have to mention your developer or promoter name is clear, marketable, and without any encumbrance. If there is an encumbrance, you have to mention in separate sheet. So you have to mention it should be without encumbrances. Here, promoter name has to be carefully given because here he is forming his opinion that this thing is very clear and marketable and without encumbrance. Sometimes it happens that developer is different and landowner is different. So in below, you have to mention all the owners of the land. Those owners of the land should be there in your title report. If it is there, it should be in a DA agreement or PA agreement, and those owners of the land should be mentioned on the RERA website also as a landowner. Now coming to last part of this thing is a report reflecting the flow of the title, which is given. So he has to give report also, which is enclosed here with as annexures. So this is separate annexures you have to get, and it has to be duly stamped and signed by the advocate, not less than 6 months. Here flow of title is given. You can give complete flow. You have no problem. You have to give complete flow, but be very careful in a litigation part. You have to mention that litigation if it is there in the RERA registration, and if you have not mentioned in a RERA registration and you have lawyer is giving litigation, then you will not see the RERA registration coming fast. So you have to mention it both way. Coming to next part. So we have a legal title report here. Again, we'll see some reports. Actually, I was not able to compile it into this.
Let me take few questions which have come. Thereafter, of course,
yes, sir.
Our
yes, sir.
Trace will take over. Question is, what action RERA is taking where you have sold inventory before registration and also disclosed in form number 3? And query has come asking why you have not taken registration earlier. Any order is passed recently for leaving penalty. Yes, Shashank, you are right. If you register without registering, if you have sold the project or sales, the penalties can be levied, which can be up to 10% of the cost of the project. However, 50,000 to 1 lakh is the penalty levied in such cases as a token penalty, which we have seen many. There are such many orders. You can simply go through the website of RERA. You will see a lot of things happening like that. Now the next question which has come is, of course, even he can take up, Vaibhav can take up, Najrana, whom to pay and where it will be taken. Najrana is nothing but a premium payable to the state government for clearing the title, which has been already answered by Radhesham Kabra. You are right, Mr. Kabra. So therefore, it goes into the land cost. So it's a part and parcel of the land. Anirudh Agarwal, I think he is from MP. Anirudh, thank you for asking this question. Can TDR obtained in one land project be used in another project? So basically, we need to understand what is TDR. The full form of TDR, transfer of development right. So therefore, what is transfer of development right? Transfer of development right is the right or a certificate which is given by the municipal corporation or a local authority saying that this is the plot of land which is reserved for, let us say, road, garden, or railway station, and this you cannot develop here. So therefore, I am giving you a certificate which is called transfer of development. Whatever is there on that particular land, I can transfer it as in another plot. So it can be transferred. Now the question arises, in a receiving plot, there is one which is generating the TDR, another is a receiving plot. If there is a receiving plot, naturally the TDR which is generated from another plot can be put in the receiving plot. So this is for the time being, but we may have to discuss too much on this. We'll do it later. Radhesham Kabra, I'm attending your third meeting. So a lot of appreciation to Mr. Vaibhav Modi. And with this, I think questions are over. And thank you very much. And over to Mr. Vaibhav Modi. And if there are still questions, there is Shashank Jain, Anirudh Agarwal, Vaibhav Modi. They are all the RERA leaders who have done 3 days, 4 days RERA leadership program. So they are competent to answer all the queries. I have to leave for one more meeting. Thank you very much for registering with us and being with us. And also, I'm happy to say that 6th and 7th, the residential program in Mumbai, mostly we will be doing under the banner of WRC of ICI. They have given a approval, and in a day or two, once the circular comes, I request you to register for that so that you are able to get a CP hours also. Thank you very much.
Whatever questions anyone has,
Only one question, sir, regarding
Yeah.
that table D in Form 3, estimated receivables. So that estimated receivable percentage we have to mention 70% or 100%. So whether that estimated receivables is including total of sold and unsold units or only sold?
No, both. Unsold, you have to take as per the ready reckoner value. Sold, you have to take the balance consideration which you have to receive. For example, there are 100 units, out of which 80 units are sold, and they are already paid more than 80% money, only 20% is remaining. That you take, and 20 flats which are remaining to be unsold, you take on a ready reckoner value, so you will know what is the balance receivable. Okay?
So
Yeah.
thank you very much, sir.
So Raj, you wanted certain example of the forms. Certainly, we'll share in the group, and because these are the standard formats. Okay. Thank you, Vaibhav, once again, and let us close the session.
Thank you so much.
thank you so much, everyone. Thank you so much for everyone to attending.
Thank you. Good night. Thank you, participants, for being with us and joining this course and taking active part. Similarly, the presenter who has taken enough pain to present the session today, panelists, and the participants who have made it very interactive. I request you, any questions are there, you can always email to us. My email address is rsprabhu13@gmail.com, and if you want, you can send the message on WhatsApp, which of course is in the description box. Still, you can take out the number 9820106766, and you can reach out to us anytime, and any new topic that you want to have a discussion on Prabhu Se Khas Baat or the courses physical or even on Zoom on any time on online, we will be very happy to organize that. You can be a presenter, you can be a faculty, you can be organizing part of the organizing committee, you can also learn. All these are open. The purpose is to empower every chartered accountant to enter into new area of practice, new area of profession, so that you are able to build your profession in a better way. Thank you very much.